Welcome back. The SGX 50 is suggesting a strong start, a gain of 50 points at the open, but there is some selling emerging in Asia ex-Japan. So Nikkei is up nearly 1%, but the other markets, Hang Seng is under pressure. The Chinese markets are down 0.5%. The Korean markets are down more than 0.5%. So keep your eye out on Asia ex-Japan. But let's drill it down to the individual stocks. The research team is standing by with CNBC-TV18's list of top stocks for the day. And we've got to start with HDFC Limited and the bank and the merger. Abhishek.
Well, Rima, if you take a look at the swap ratio, it's about 42 to 25 is what the swap ratio is. So that means 42 shares of HDFC Bank will be given for every 25 shares that you own in HDFC Limited. So based on this swap ratio, if you do back of the envelope calculation, market cap of HDFC Limited will come to around 5.11 lakh crore. So current market cap is about 5.06 lakh crore. So gap is about 1.06% between the market cap based on the swap ratio and based on the current market cap. So there is a potential upside of about 1% based on the swap ratio available with us. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. So we'll be keeping an eye out on the HDFC twins, but also on HDFC Life, because HDFC Limited went ahead and bought some shares yesterday. Surbhi joins us to fill us in with more details and how are things shaping up. Surbhi?
So HDFC bought 1.49 crores shares, which is close to 0.69% stake in HDFC Life for 992 odd crores. Now the merged entity currently, HDFC currently owns 48.65% stake in HDFC Life, and the merged entity has to increase stake to 50% prior to the effective dates. Another 0.66% of stake needs to be bought of HDFC Life between before the effective date. So that will happen between now and Friday.
Okay, thank you very much for that. Let's now go across to Vivek for some more stocks which are in the news.
Well, good morning. Quite a few stocks on the radar on the back of block deals as well as news flow. First on our list is Sapphire Foods. Yesterday, WWD Rudy, which held almost 4.77% stake in the company, completely exited its stake. And, some of the key buyers included Goldman Sachs, Society Generale, as well as Nomura India's, the mother fund actually picked up a significant chunk over there. Also keep an eye out for Orchid Pharma. A few days back, the company launched fundraise via the QIP route. Yesterday, the company successfully closed this particular QIP, raising almost 400 crore at 425 rupees a share. Now, looking at some of the key buyers that picked up more than 5% stake via the QIP, Massachusetts Institute of Technology picked up almost 24% of the total QIP. Bond Mutual Fund via two schemes, Carnelian Structural Fund as well as Society Generale picked up significant chunks in the QIP. Watch out for Titagar Rail as well. The company has gone ahead and received an LOA, letter of award, for a project worth almost 875 crore. Now, this is from the Gujarat Mail Corporation for supply of gauge standard cars. And lastly, Gland Pharma, some positive news flow coming in. After a pre-approval inspection of the Hyderabad facility by the US FDA, the company received just one observation in the Form 483. So some relief coming in for Gland Pharma as well.
All right, Vivek, thanks very much for that. But more stocks with news flow. Sonal is standing by with that list. Sonal, morning.
Good morning, Prashant. Let me start with Ramco Cements because the company has commissioned line 3 at Ramamasmi Rajanagar at 3,000 tons per day capacity of clinkerization. So that stock is in focus. For TCNS Clothing, they have received approval from CCI for acquisition of TCNS Clothing by Aditya Birla Fashion. And BSE is in focus because now NSE has gone ahead, scrapped their plan to shift Nifty Bank F&O expiry to Friday. There is a joint press release which has come in from NSE and BSE where they talk about how proposed Friday expiry of Bank Nifty coincides with the expiry of the F&O contracts which was launched by BSE on 15th of May itself. And based on the market feedback, BSE feels that this could impact the growth of Sensex or BankX derivatives which were launched by BSE. And that's why BSE requested NSE to consider shifting of the Bank Nifty expiry to any other day other than Friday, and that's why this particular notification was revoked.
Thank you for that. And let's do a quick recap then of the top stocks. Stocks with positive news flow are HDFC Limited, HDFC Bank, HDFC Life, Sapphire Foods, Orchid Pharma, Titagar Rail Systems, Gland Pharma, Ramco Systems, TCNS Clothing and BSE. And there are no stocks on our radar with negative news flow this morning.
Okay, all right. Well, that's the top 10 list. But Abhishek is still with us to run us through some interesting brokerage notes that came in early today. Abhishek?
Well, Nigel, to begin with, UBS has written on BEL. They have a buy recommendation over there, and the target price has been raised to rupees 140 per share. They say that the company is well armed for return accretive growth going ahead, and they are on track for continued profitable growth going ahead. We have Bernstein, who have written on HDFC Bank. They reiterated their buy call, and the target price is about rupees 2,300. Now, HDFC Bank's management had announced an aspiration to achieve 30% operating efficiency, that is cost to income ratio, over the next decade. So I just did back of the envelope calculation. This ratio post the merger would be around 35% from the current level of 40.4% that you saw in FY23. This benchmark of 30% cost to income ratio, as per Bernstein, is seen with large Chinese and a few Middle Eastern banks. We also have CLSA, who have written on Tata Motors. They have a buy recommendation. Target price has been increased by rupees 50 per share to about rupees 690 per share. They say that JLR EBIT margin is likely to hit 6% by FY24. That is why they are raising the consolidated earnings forecast by 11% to 18% over the next couple of years, largely led by the higher margin estimate for JLR and CV business. We also have JP Morgan on RIL, who have an overweight rating and a target price of rupees 2,960 per share. They say that continue to see a stock offering attractive risk reward over the next 12-month basis. So while OTC supports earnings momentum in CY23, CY24 should benefit from multiple positive catalysts across telecom, retail, as well as lower capex intensity. Back to you.
Okay, well, Abhishek, thank you very much for that. So that's basically completes the list of stocks that you need to watch out for as we begin today's session. Deepan Mehta of Elixir Equities will join in for some fundamental stock check. Later, we'll have the management of Ramakrishna Forgings to talk about their recent order win. Stay tuned. Those conversations coming up in just a bit.